Okay, recording this video after close of trade Wednesday, December 22nd, 2010. And I've not recorded any video in the last couple of days simply because I've not been trading, and probably like many of you out there, I've been kind of caught up with other things, Christmas things kind of going on. But I want to record this video because the activity I see in the marketplace at the moment it really has me kind of troubled. And it has to do with kind of reaching new highs on extremely light volumes, and I want to show you some of the charts that I'm looking at. Just on a daily chart of the Emini here, you can just see the last kind of 3 days activity, Monday, Tuesday, Wednesday, and the declining volume that we've had over the last 10 days or so. Today we only did about 0.6 million contracts traded in the Emini, and there we go, we kind of breached 1250, closed at 1254.75. For this particular pattern that I'm kind of looking at here, the look of this is what I think of as it looks to me like a crane, a building crane, where you get this kind of rising trend line and then another kind of rising trend line but at a steeper angle, because there's less and less range as we're kind of making new highs. And when you look at that on extremely low volumes kind of going forward, that's a very unstable pattern. This kind of rising with decreasing range, decreasing volume, just shows a lack of kind of demand at these highs. Although I must admit, the average trade size has been extremely, unusually high over the last several days, and not that that's, kind of dissuading me from this being an unstable pattern. In fact, that shows more kind of professional profit taking, but it just shows that there's this unstable kind of shape developing. And I wanted to show you, just kind of going back several years, what kind of Noda-Barn type patterns happened at this time of year. So I've gone back about 9 years, so starting with the end of 2001, rolling over to 2002. All I've got on these charts here is better volume, both the histogram and the paint bar, and the only signal that I've switched on the better volume is the low volume signals here. And although at this kind of transition into 2002 we didn't actually have kind of yellow no volume bars print, you can see that the volume, particularly kind of at Christmas time, was extremely light here. So that was a low volume up bar, and then with January, the first week in January, that was kind of the peak of the market, and then we kind of sold off for about 2 months at the beginning of 2002. Coming into 2003, you can see these kind of low volume bars printed in yellow, and then on the charts themselves, and here we had a low volume down bar and then a low volume up bar, then eventually rolling over. The low volume down bar shows a lack of supply, and then coming up into that kind of middle of January, you can see that low volume up bar coming into that turning point was a sign of weakness. Into 2004, continuation of the uptrend, and so we were kind of breaking into new uptrends here, so it doesn't really kind of confirm my hypothesis in this particular example. 2005 though, a whole series, a couple of low volume up bars. This is this kind of crane type pattern where we're kind of reaching higher and higher highs here, but it's on less and less volume. You might argue that the ranges start to decline right at the end there, but this is essentially a fairly unstable pattern that leads to some kind of decline. Into 2006, this was actually low volume down bar at Christmas time, followed by a continuation of the uptrend after a little bit of a test back to those lows. So 2007, here we had a little bit of a nothing bar at Christmas time, and then the first bar in January was a low volume down bar that led to this similar type of pattern here with a decline at the beginning, the end of the first quarter 2007. 2008, the pattern here was kind of a low volume up bar, kind of reaching new highs here, and then at the beginning of January this market started to tank pretty hard. 2009, here you can see the Christmas January bar, low volume up bar leading to a decline, and then 2010, the beginning of 2010, a little bit of continuation of this up move, and then we had a correction at the beginning of the last week of January, beginning of February. And then into the beginning of 2011, we're kind of the Christmas period here, extremely light volume here, as you'd expect up here. The point I'm trying to make is I suppose a lot of people go away at Christmas time and say, well, whatever happens to that period is just kind of rookie traders being left at the desks. The pros have gone away, and no one of consequence is kind of making serious trades, and we don't get any kind of reliable signals during that time period. What I kind of noticed during this kind of Christmas, January, 1st of January type period is that we often get these extremely low volume activity with kind of new highs being made, and then a total change in trend coming almost on the first day, the first trading day of January, where things really start to move in the opposite kind of direction. So and particularly because we're making new highs on low volume and showing no demand, for me, I'm very concerned that that's what's going to happen. The question for me is, is this going to start to break the day before Christmas? Is this going to break before New Year, or is it going to wait until the New Year? So it's kind of, and really we'll start to see it in kind of breaks of significant kind of trend lines when those happen. But there might be some good trading activity and some large range kind of down bars that we can take advantage over the next few days. So we have to kind of wait and see. Then just quickly going through the kind of multi-market views here on daily charts of the E-mini. Here you can see rainbow patterns here. As I've said, new highs, low volume, that's typical kind of Rambo pattern here. And we've had our exhaustion buying, we've had our flush signal, we're coming back up to the flush type levels of buying activity, so we'll probably get another either flush, my guess is a flush signal when this kind of signals on better momentum over the next couple of days. Crude oil, again, kind of making new highs on amateur bars, low volume bars here, and extremely weak buying, after having a couple of flush patterns as we're kind of creeping up to 90, 92, and there's a lot of bullish talk about crude right now, and I'm just wondering if this is actually going to roll over because the buying activity is so weak. Copper here, got almost like a double top being made here with these Rambo patterns, couple of Rambo patterns. There's actually a no demand just being printed slightly off screen there. We've had our exhaustion buying, but this has been an extremely strong market kind of over the last several months. It's kind of the opposite pattern here that you can see on 30-year bonds. Last couple of days have been down bars with kind of amateur activity and low volume down bars. This is actually testing, and this is showing no supply. So we've had our end of trend warning signal, we've had our exhaustion selling, our flush signal, all of these bullish divergence signals happening around our end of trend, and now we're kind of testing these lows on extremely light volume. And just because it's Christmas, New Year doesn't, for me, kind of negate these patterns. And so a break above 122 and a kind of let's say an exit out of equities and a rush into bonds is a potential kind of scenario. Gold being a proxy for the US dollar, kind of an inverse of the US dollar. As I've said, we've had our end of trend warning signal and a second cyclical turn, which is often a turning point for a change of trend. We've had our exhaustion buying, our flush signal. We've now had bearish divergence at this second cyclical turn after end of trend, and now we're kind of coming back in to 1400, trying to break 1400, and you can see these tiny little amateur up bars, yellow low volume up bars, kind of coming into 1400 and potentially showing that there's a lack of demand to push us through 1400 there. And market kind of goes the other way. If we were seeing low volume down bars at lows here and markets kind of starting to turn around after exhaustion selling and so on, and the inverse of these patterns, I'd be saying, well, there's continuation of the uptrend, but it's because these are trying to break to new highs with low volume amateur kind of up bars signaling no demand, and you can see less and less buying activity coming into the market here. So there we go, kind of a view of patterns, low volume patterns around Christmas and New Year, and just watch out over the next days, literally, because just because this is kind of low volume activity and there's not a lot of professionals at their desks making these trades doesn't mean that kind of turning points and signals aren't valid in this time period from what I've seen historically on my charts. Anyway, so I hope your trading is going well, and of course for everybody who celebrates Christmas, have a great Christmas.